Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have BINIAZ and Ava Benesocky. They are founders of CPI Capital, a Canadian-based real estate investment firm that focuses on identifying multifamily opportunities throughout the United States and offering it to their investors all over North America. So thank you so much for being on the show today.
Thanks for having us.
Thanks for having us, Charles. We're excited to be here.
It's awesome to have actual foreign investors that come on the show, because I always talk to people that have done it, and they kind of, unless that you guys have a business for doing it, so you're interested in coming on. But a lot of investors that have done one or two deals are not really interested in coming on. So it's great that I can find actual international investors that work with international investors all day long. And we can kind of talk about what you guys see happening, what you guys do. But give us a little background, both personally and professionally, both of you, prior to getting involved in real estate investing.
Yeah, for sure.
Please go ahead,
So thanks again for having us. We're really excited to bring value to your listeners. Firstly, I'm CEO of CPI Capital. We're a real estate investment firm based in Vancouver, Canada. A little bit about what I did beforehand is I have a real estate background. I was in real estate for over a decade. How time flies. I started very young at the age of 22, and I was in residential real estate, and I helped many investors over the years. In Canada particularly, there's a lot of pain points that exist for investors wanting to invest in real estate, with median home prices being very high, and of course trying to scale as an active investor. So I pivoted my focus to real estate private equity about 2 years ago, where we co-founded CPI Capital. It's a uniquely innovative company that allows investors to invest in real estate, fractional real estate investing, we call it, and relieves them from all the pain points. And that's kind of a little bit about me.
No, for sure. Yeah. Great. Yeah. My background is also in construction, real estate development for the past 15 years. And I've been significantly involved in real estate for a long time. It was just probably around 3 years ago when I realized about this concept of real estate private equity, or syndication as they call it in the US, where an operator or general partner finds a deal, brings on investors, manages the deal for the portion of the profit. Love the concept. Unfortunately, we were here in Canada, and the issue here was that the rental yields are so low that the business model doesn't really work here. You could syndicate deals, and I was syndicating deals before even knowing what syndication meant. I was finding deals, bringing on investors, but to be able to pay cash flow and for that the rental yield to exist, it was really non-existent here. So when I saw the US, we realized the opportunity that exists right across the border. And then the more research we did, we realized that on the institutional level, there's lots of investments being done in the billions of dollars annually, where the Canadian pension fund partnered with Greystar to purchase large multifamily properties in the US and build multifamily. So we knew that it's already happening on an institutional level. How can we offer this to retail investors? And we started on a journey, educational journey initially, realizing all the tax, cross-border tax items, compliance issues, corporate structure needed, and then having to partner with operators and what have you. And we started CPI Capital, and it's been an incredible journey, and we've dedicated really our lives to it. So excited to be here today and chat with you more about it.
Awesome. So what was your first real estate investment? Did you guys start off with a fractional ownership, or you limited partners in a syndication, or how did you guys first dip your toes in the water?
This is for you're pertaining to the multifamily private equity, or just in general ever?
I would say with that, your first investment, maybe not a primary residence, but anywhere. It could be in Canada, it could be any other country, or here in the United States, kind of how you guys started.
For sure.
Well, mine was in Alberta.
Yes.
I bought a duplex.
Okay.
That was my first real estate investment ever. And, it goes back to investing in Canada, where you're purchasing for cash flow, there's not much appreciation. And where you're purchasing for appreciation, there's not much cash flow. So that was my first real estate investment.
That was your primary residence, though.
It was, yes.
But your house hacked it almost, right?
Yeah.
Nice. Awesome.
Yes, and for me it was very interesting. My family was always very much interested in real estate. They were not big real estate investors, but they believed in the asset class. I was in downtown Vancouver going for a walk, and I saw a presentation center where they were planning to build a high rise, and there were these one bedrooms for sale at 199,000, and you could put down. It was a pre-sale, so you could put down 5%. And I had some money. This is almost 20 years ago, maybe around 18 years ago. And you could put down some I think 5% down. And at that time, you could get CMHC loan, which is insured similar to Fannie Mae and Freddie Mac in the U.S. And that was the first, the one-bedroom condo that I purchased. It was delayed for a year or so for construction. And
200,000?
200,000.
We all just had a crystal ball.
Downtown Vancouver, 200,000, and then I ended up selling it. Unfortunately, I shouldn't have. Never. I ended up selling it for I think 475,000 years later. But yeah.
And now it's probably
worth around 700K. I would say 750 maybe.
Wow, that's crazy.
Right? Yeah.
It's interesting how you call it fractional ownership because, and we call it here a syndication, and it changes per different country. I remember I was at a meetup in Hong Kong. And I was talking to people about multifamily. They're like, "What the hell is multifamily?" And I was like, they're like, "Oh, you just buy like a lot of flats and then you rent them out and stuff." And I was like, "Yes, that's okay. That's how I'm going to explain it here. Then that's perfect. Yes."
Oh, interesting.
Yeah. yes. Yeah, and again, there's a lot of terms that get thrown around, and a lot of Canadians are receiving their educational content coming from the U.S. side, so it creates a lot of confusion. There's a lot of terms that have different meanings in the U.S. For example, in the U.S. it's recommended to use LLCs to purchase real estate and what have you, but we don't have LLCs in Canada. We have corporations, we have limited partnerships, we have limited liability partnerships, but we don't have LLCs.
And another good one is the offering memorandum. Here it's an actual contract that's made an exemption that we use to raise capital, as opposed to the U.S. where it's a deal presentation. So August and I really seen with the terminology that was used, that was so different on each side of the border, and we kind of educate our Canadian investors. Hey, it doesn't mean that. Don't get confused.
So what is a CPI? What is your current investment strategy in, I imagine you're focusing mainly in the United States, if not all. What is your current investment strategy? What type of markets are you looking at? Properties you're looking at investing in?
Well, we love the Sunbelt states. We follow the numbers,
Yes.
right? Consistent job growth, population growth, income growth, and rental growth. So we love the Sunbelt states where everybody's kind of flocking right now, the Fortune 500 companies. And go ahead, why don't you tell our business model?
Our business model is actually very interesting. I mean, our journey is very interesting. Anytime I look at real estate private equity firms, their journey is always somehow the principal started from single family and then eventually scaled up to eventually get into multifamily, and then there was a need for capital, and then they seek private equity to do their business. With us, when we realize the potentials that exist in the U.S. and we realize that we have to deal with possibly hundreds or even thousands of investors, right away we focus on what is the best product to present to our investors, and that was institutional multifamily. But institutional multifamily is 100 plus unit, in some cases now it's 200 plus unit, and we're talking about tens of millions of dollars. So CPI Capital started out as a real estate private equity firm rather than us starting from single family and moving our way up. So it's a very interesting process. But yes, it's a real estate private equity firm that partners with Canadian LPs and US LPs to purchase US multifamily real estate, both Class A, where there needs to be a value add component in the assets we look at, but it doesn't necessarily have to be renovations. It could be some certain types of upgrades that force appreciates the asset, and that's kind of our 30,000 view of our business model.
And that's exciting. That's what we love to educate investors on is how you can go into a multifamily asset and force appreciate the value. That's what's so exciting about our business model, is going in there and force appreciating the value of the asset, which is so powerful. That's why we call it a wealth building machine. And then, do that and everybody wins on the back end. So.
Awesome. So you touched on it prior about the differences between US and Canadian real estate. And you use some examples. Are you able to kind of dig into that and let us know kind of taxes, cap rates, cash flow, how it differs, and then how it differs between the United States and Canada?
Sure, I can give some tax breakdowns and the differences. So there is no 1031 exchange. There is no deferral of taxes in real estate. But the advantage that Canada has is on a primary residence, there's no capital gains paid. So if a property is and there's no cap. I think in the U.S. the cap is at 250,000 profits. Anything above that you have to pay capital gains on, even on your primary residence. Where in Canada, as long as a property is your primary residence, you can sell it for any profit and there is no cap, so there's no capital gains. It's fully tax-free. As far as depreciation and cost segregation is not as advantageous as the U.S. They do exist, but it's much less here in Canada. What are the tax items? Is there anything else?
That's about it for tax. But I wanted to touch on cash flows and cap rates and that kind of stuff as well. So in the great cities here in Canada, where you're purchasing for appreciation, because you obviously as a real estate investor, you want two main fundamental components, and that's cash flow and appreciation. You can't really get both here in Canada. So in the great cities, Vancouver and Toronto, a median home price is 1 to 1.3 million. So you're banking on that speculation of appreciation, but you're most likely in most cases in negative cash flow. And the other provinces that you purchase in, you get a little bit of cash flow, but you're not getting much appreciation. Now, for cap rates, they're very compressed in the cities, that obviously in the great cities as well, at a 1 to 2%.
They're being advertised to be around 3.5%, but the more research you do into it's much lower than that.
Yeah, so if you really look at it, the business model of the excitement to purchase multifamily is not exactly the greatest fun for us here. It's for people who want to just park their money somewhere and have really deep pockets, right? So it doesn't work for investors kind of pulling together their capital in our business model.
For sure, and the U.S. population, I mean, over 300 million. There is a interstate migration happening within the U.S. People move, so they're not reliant on foreign investors or on foreign immigration. Canada is very reliant on foreign immigration. There's 300,000 immigrants that come into Canada pre-COVID annually, and majority of them want to live in Vancouver and Toronto. So that's what kind of creates the demand. So something could happen as far as immigration or regulations, and it will affect the market right away. So totally different market. Also, the investing culture is a lot different between Canada and the U.S. Canadians are very conservative.
Very conservative.
They're hyper cautious when it comes to investing and what have you. Americans, I mean, we've had many U.S. investors investing with us, and they give us, hey, what is the minimum? Is 25,000. All right, I invest 50K with you.
Yeah, no problem. Like one phone call. Canadians are like, Ava, I gotta have a call with you again, and then another call, then another call after that. I'm like, no problem.
The list of questions of Canadian investors, like, what did you do before? Did you ever own another company? Like, we have to go through an interview session with all our Canadian.
But it's really exciting educating people.
Yes.
It's really, really exciting educating people, and yeah, Canadians are so different from Americans.
It's amazing because we share a border and stuff like that, and a lot of different customs and thoughts. But so tell us more about. Why would it be, obviously, not knowing United States real estate makes it difficult for someone to invest, but what are the reasonings making it? And now you've done it many of times before yourselves and for investors, so it's not difficult for you. But if I was a Canadian investor want to invest in the United States, what are the biggest hurdles, let's say, that I would have to overcome, whether it's into a syndication or whether it's or fractional ownership, or is it into my own property as an active investor or turnkey investor or something like that?
For sure, and let's differentiate those two, particularly because there's issues and concerns with both of those items. So, as far as an individual investor looking to invest in real estate in the U.S., Canadian investor, the issues and hurdles they're going to face is debt, is getting debt. Yeah. So that's going to be the first concern. In some cases, they can't apply for any debt, and the other main issue is repatriation of any profits they've made on the U.S. side, and then obviously remote management that goes hand in hand with owning properties in the U.S. and also finding the right property. You call a real estate agent, and you're at the mercy of the agent and the deals they send to you, so you not have a consistent deal flow. So that's the issues as far as somebody looking to invest, themselves personally into U.S. real estate. But on the syndication side, on real estate private equity, the concern is there are operators, investment firms in the U.S. that accept Canadian investors, but their process is not tax efficient. So most syndications, most real estate private equity firms utilize the LLC structure to put their deals together. LLCs are the most inefficient tax structure for Canadians. Canadians will be taxed, double taxed. They'll have to pay taxes in the US, they have to pay taxes in Canada. So up to 70% of their profits is gone to taxes for both countries. And that's the concern when it comes to other operators saying, hey, yeah, if you're Canadian, that's fine. Just incorporate a US LLC and you can invest with us through your US LLC. And unfortunately, some of our investors and many people we've talked to have gone that route. Yeah. So that's the concern. So our firm, what it does is obviously with a extensive focus on tax efficiency, has created a tax efficient process where we create a fund of fund structure. Canadians invest into a Canadian fund, and then the Canadian fund invests into the US fund that owns the asset. Any US investors that we have invest directly into the US fund.
Okay, so that would be, just to go over this one more time, that fund, I imagine in Canada, is a limited partnership. Yes. And then that is owning a share of the, I imagine, the United States, most of the deals operators are doing, like you said, are LLC. So the property is usually owned in an LLC, and then you have the different LLCs around it of, like, you know, general partners and limited partners and all this stuff. So that LP is owning portion of the limited partnership, limited liability company here in the United States.
Yeah. So unfortunately, if there is a LLC involved at any part of it, it makes it it's not tax efficient. So it gets a bit more complicated. So the Canadian LP limited partnership becomes an LP of the US single purpose vehicle. So so it's structured a bit different.
I gotcha. It's almost like a tenants in common kind of thing that you'd have if you're 1031 something here in the United States, which you don't have it there, but it's something where there actually has direct ownership of the property. So, that makes sense, because we do properties. One of my partners is from Canada, and that we're doing a deal right now in Georgia, and we form everything in LPs, and we do everything in LPs because of a lot of foreign investors. He's originally from Toronto. So it's something that I see it all the time. And every time I see it, I go, oh, there's Canadian investors. Yeah. And every time I see it, I know exactly why it's being done. But so you talked about how, let's just say, Canadian investors are much more thorough when they're investing compared to United States investors, or Americans in general, I guess, U.S. people in general. But what common concerns or risks Canadian investors have that you see when they're considering an investment in U.S. multifamily, other than vetting you guys and making sure that you guys are legitimate? What other concerns do they usually have?
I'll let Ava take this because she's head of investor relations, so she deals with these concerns on a daily basis.
Yeah, the biggest one is the tax efficiency. Okay. I have to say that's a question that's a conversation I'm having hundreds of times now with investors. And other than that, most Canadians, they just want to learn about how the project is being executed, like how the business model is being executed, and really kind of just on a high level learn about the states that we're investing in, and we educate our investors on all that as well. Those are just kind of I'm just trying to think, it's mostly about the tax, because most Canadians that I have conversations with, you guys, they're so excited to learn more because the numbers are so low here compared to what we're seeing in the US.
I think one of the major concerns that Ava saw, and we both saw initially, was the idea that the returns we were offering on our deal presentations were too high. And it literally sounded too good to be true.
Okay, yes, that's...
So our advisors that told us, hey, listen, bring your returns lower on your presentation. I'm like, hey, that's what's showing in our performance. We're not amplifying. We're actually being conservative. Like, that's fine. Lower the returns, because that's to Canadian investors who are happy with a 4%, 5% gross in some cases on their investments. When they see 20% double your money in 5 years, it's going to sound...
it's going to sound like too good to be true, right? So they're like, hey, tell me more about how you guys get these types of returns. And then I explained to them, from the rents we collect, we're able to pay everybody, and then still have enough cash flow left over for you guys. So that's one of the main concerns as well, was the returns are a little bit too high.
And then we explained the value add concept, where you upgrade the units, putting washer dryers might cost us $1,200 per unit. That increases the rents by $35 to $50 per unit. That increases the NOI. And just by that increased NOI, we are creating millions of dollars in a value creation. And that concept is
on a 200 unit at $150 rent premium, you're creating close to $10 million in value. So I also talk to them about that.
On a 4% cap rate.
On a 4% cap rate. Now keep in mind, a lot of people that get on calls with me, they've never heard of what fractional real estate investment or real estate syndication. A lot of Canadians want to invest across borders because obviously there's so much opportunity that exists and they can see that. They just don't know where to begin. They don't know where to start. And then we get out there, we speak on many platforms and say, hey, everybody, guess what? You can invest in real estate 100% passive with limited liability and kind of leave all the heavy lifting. We take all the hard work away from real estate investing. So they're just really excited to talk about that too. It's actually a new concept for not only just Canadians. A lot of U.S. investors are reaching out to me as well, saying, "Hey, wait a second, I can diversify my financial portfolio with real estate syndication. This is so cool."
Passive investing, limited liability, don't have to worry about debt, and then you take 70% of the profits, and they're in case that they're preferred returns. And I suggest to any investor who's looking to invest, make sure there's preferred returns being offered. And you're keeping the feet of the general partner to the fire to make sure they perform, because if they don't hit that preferred return, they're not participating in any upside. So it's
and it's backed by a tangible asset. There's just, the list goes on, right? So oh gosh, those are kind of that's the conversations we're having on a day-to-day.
Oh, that's great. Those are all great selling points. So obviously you guys are in Vancouver. These properties are in the Sun Belt. You're working with operators in these areas. Myself being in Florida, I would consider myself there. So what are you looking for in operators, and how do you evaluate them in-house before you're offering these opportunities to your investor base in Canada?
Yes. And I'll go back to kind of the inception of CPI and its trajectory and its growth. Initially, when we started CPI, the plan was for CPI to be the operator. And when we realized about the amount of time that's going into our educational content, where we're creating our YouTube channel, and multiple platforms we're on, and the time that's being spent to cultivate and nurture relationships with investors, we realized that we might not have enough enough time or resources to spend on the asset acquisition and management. So we made the decision early on to partner with active operators to be our boots on the ground in the regions we want to be in. But soon we realized that model is an excellent model, because we realize a lot of firms, they become focused in the regions they're in, the actual operators. So if they're in Florida, they're very Florida focused, and they have to, at some point, they have to deploy capital. So they end up buying deals, maybe not the best deals that was available. They just had to buy a deal. And when they have an infrastructure, they have employees, they have overhead. For us, we realized that, hey, we have, first is in the regions we want to be in. We want to be, just like Ava mentioned, in the Sunbelt states and the states that show certain growth metrics. But now we partner with certain operators in the regions, and then we sit back and literally cherry pick the best deals the operators send to us, and then the deals that make sense, that we present those deals to our investors. So our deal, it creates excellent deal flow, and also tremendous possibility for return and growth to our investors. So we ended up actually falling in love with this concept of partnering with operators, the same kind of concept that larger firms like, that use, even Blackstones of the world, use operator kind of model to partner with the boots on the ground.
And then we can be diversified throughout the Sunbelt states, not just be stuck in one area.
Yeah, a lot of different operators. And I like the idea, because the majority of the time what we're looking at when we're talking to partners in other operators, it's, you're just turning down deals. And the majority of deals we're turning down, which is, people, I have investors ask me, hey, when's the next? Well, when we find something that works, we're not pushing. You have to make sure something, checks off the boxes that you're comfortable with, that your investors will be comfortable with, that everything, you know what I mean? The whole process that you're underwriting a deal with, when they send you underwriting and you're reviewing it and everything else that goes with it. But if your group focuses on raising capital, so what are the most effective methods for finding accredited investors and raising money in the US or as well in Canada?
Well, August and I have really dedicated our lives to kind of spreading awareness of who we are and building a really big brand, right? So we're speaking on many platforms throughout Canada and the US, and that's created a lot of attention for us.
Absolutely.
Being featured in news publications was another really big one for us. Just talking about real estate syndication and the opportunity that exists for investors. We've had a lot of people sign up through just creating awareness and getting out there.
Yes.
And then of course nurturing. We're very good at nurturing our investor community.
Yes, it doesn't hurt when you have a monopoly. It doesn't hurt when you're offering products to your investors at a 20%, 15 to 20% annual return that provides cash flow from day one, and then other products in the market don't provide pref returns. In most cases, there is no cash flow. Is a minimum 10. In some cases, minimum 10-year hold. So when you have a product that differentiates itself as such, so it makes the job a lot easier. But also early on, when we started kind of researching the cross-border taxations and compliance items and many other issues, we realized there isn't a lot of content when it comes to Canadians investing in the U.S. There is on an individual level, but not on this concept of real estate private equity. So we started an educational wing of our company that a lot of time and resources get dedicated to, and that I would say that's probably our number one lead generating platform is our YouTube show, our meetup groups across Canada, our events that we hold. We're very active on LinkedIn. LinkedIn is an excellent place to create connections, not only for investors, but also for other professionals in the industry. I have operators that contact me on weekly basis that I connect with, and some of them I've ended up working with. So LinkedIn is another great platform to seek potential leads, and that's kind of been been our journey with cultivating a relationship with investors.
Yeah.
Awesome. Yeah, LinkedIn's a fantastic platform, and I like it better than some of the other ones because I get a lot less spam on it, if minimal, if that. It's just like, I don't know how they do it, but compared to like Facebook and stuff, I get messages all the time. I'm trying to delete them and stuff. But what are common mistakes that you see real estate investors make, since you have evaluated a number of operators and deals and stuff like that? What do you think are things that are huge red flags, or things that operators do that are mistakes?
Yeah, I think for when I look at, again, the real estate space is very broad, but generally investing in real estate, you don't want to have fear of missing out and having to invest in something, if this is on a single family or on a personal level, or investing with a private equity firm, real estate private equity firm, is not to be forced to invest, or there's a fear of missing out. Taking your time, understanding the business model, understanding the operator. Also, the fact that transparency is extremely important. If a group is not being transparent, not answering your question, is not being prompt, that's another kind of red flag to look out for, particularly working with groups. And investors have to understand that as much as we boast and brag about real estate private equity and this concept of syndication, it is somewhat of a marriage. When you're investing, your capital is in that project. You're stuck in it for the term of the project, 3 years, 5 years, 7 years, and is somewhat of a marriage with the operator. So if you feel like you're not getting along, or you don't have a good gut feeling, you should really go with that gut feeling, because your investment is in the hands of the general partner, and any decision they make. That's the whole concept of GPLP, is that the LPs are the silent partners, the investors, and the GP makes all the decisions related to the deal. So they could decide to hold the deal for an extra couple of years. So those are all the the items that an investor has to focus on.
Yeah, ask a lot of questions before you make a decision, for sure. See what kind of what the communication's going to be like.
That's a big one.
See how much they communicate. Hey, is it going to be monthly? Is it going to be quarterly statements, rent rolls? Like, tell me, how much am I involved here? Because that's a big one as well.
Yeah. I was at this conference a couple of years back, and somebody got on stage and they're like, who's on deal lists, like emails, right? And everybody, half the room raised their hand, like, who wish they had better communication from those operators that they're getting emails from. And most of the hands stayed up. And it's crazy because it's communication is such a big thing, especially in the beginning of the relationship when you've purchased that. And there's well-known groups of operators out there that have poor communication, that are very good, but they just don't have very good communication. So it's something that I always like speaking to limited partners that have invested prior to working with an operator to see how it works and how is the communication and everything like that. Because, it's like, they're good operators. That's number one. But then also it's like, Well, your new limited partners don't know that, right? So it's very important. So that's awesome. That's great information.
Yeah. I just say one more quick point here is when we see these multi-billion-dollar firms and funds, and I subscribe to their information, and I speak with some of their investors, and when we see the newsletter they send out, and the amount of access to resources they have, and the content that they create is either minimal or non-existent, and not only even on the kind of emails they send out, and investors have talked to us is like, hey, your process for onboarding an investor and the communication that you have is greater than these, some publicly traded huge REITs. So that's shocking, right? So I mean, it's just that's that.
Yeah, no, it's completely true. So other than you guys becoming experts in Canadians investing into U.S. real estate, what are main factors that have contributed to your success?
I'd say resilience.
Absolutely, yes.
Resilience. It hasn't been obviously building a business from the ground up is not an easy thing to do. But resilience, learning that, you create a system. If it doesn't work out, that's okay. Just keep going, create another system and another system, and it will end up, you'll perfect your systems and things will get a lot easier as you go along.
Sure. For me, frankly, is mindset. I mean, is limitations that we create in ourselves, and it's part of our imagination. We literally create limitations that are not there. Particularly like in this business, real estate private equity is one of the most sophisticated businesses out there, and most times the common kind of view is, hey, this is above your pay grade. Don't get involved in such business. But in the age we live today, everything is done through contractors anyways. Even large firms, they have a certain executive that looks after a certain department. And today, those executives are for hire through great, online platforms. So, and you can have we have somebody with a PhD that helps us from overseas. For a fraction of the price in some of the work that we do, content creators and graphic designers. It is possible as long as you're great at managing, and as long as you have laser focus on the concept and the idea that you have, it's all possible. So I would say the mindset is not allowing for there to be limitations and creating more possibilities for yourself and your business.
Beautifully said. And if I could add one more thing, really believing what you're doing can help a lot of people. Like, that's another thing. We really believe in, what we're doing, and we're so excited to share it with so many people. I think people can see the excitement and you know what I mean? And when people
sometimes we're a little too excited.
We're a little too excited. Calm down.
We're students of the game. We love learning more.
Yes.
Like in our spare time, we watch videos and we read books. You have to be the student of the game because we're dealing with investors' capital, and we're stewards of their investments. It's so important to know everything about the business. So our FAQ list keeps growing.
It keeps growing.
Every time a question is asked that we don't know the answer to, gets added to the FAQ.
Absolutely.
Nice. Awesome. That's fantastic. It's awesome what you said about the mindset, because I think that's a huge thing that's a little overlooked when I ask that question in different podcasts. So, but awesome. Very good. So how can our listeners learn more about you and your business?
Yeah, so we have a YouTube show. So you can find us on YouTube, Canadian Passive Investing Academy. And then also we're really active on LinkedIn, Ava Benesocky. You can find me. I'm super easy to get a hold of.
August BINIAZ on LinkedIn. Our website is cpicapital.ca. We're trying to buy the .com, but the guy is asking too much money for it. We love LinkedIn. We're there all the time, creating content, giving lots of great information on there. Our YouTube show, and we're very, we're a leadership team of a real estate private equity firm that are very easy to reach. You can give us a call. Our phone numbers, emails, everything is online, and get in touch with us if you have a question or any comment, and love to add value.
Yeah, absolutely.
Okay, sounds good. Well, thank you so much for coming on today. Looking forward to touching base with you guys face to face at some point, and I'll put all those links into the show notes.
Thank you so much for having us, Charles. This was a lot of fun.
Have a great rest of your day.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.